Πηγαίνουμε στην επόμενη ενότητα που είναι The Greek Investment Landscape, Attracting International Investors and Funds, και μαζί μας έχουμε σαν moderator τον κύριο Alexis Damalas, partner τη Financial Advisor Leader της Deloitte Greece, ο οποίος θα αναλάβει να συστήσει και τους υπόλοιπους συνομιλητές. Κύριε Damalas, έχετε το λόγο. Ευχαριστώ.
Καλησπέρα κύριε Σπιρτούνια. Καλησπέρα σε όλους. Καταρχήν θα ήθελα να πω ότι αυτή η συζήτηση λόγω του αντικειμένου των διεθνών επενδύσεων και των ξένων φαντ θα την κάνουμε στα αγγλικά, οπότε θα με συγχωρέσετε, θα γυρίσω στα αγγλικά από αυτή τη στιγμή. So good afternoon, ladies and gentlemen. On the Greek investment landscape, attractive international investors and funds panel, we have with us today four distinguished speakers. Mr. Alexis Patelis is the Chief Economic Advisor of Prime Minister Mitsotakis and a distinct international economist. Mr. Christos Megalou, CEO of Piraeus Bank, one of the Greek four systemic banks, and very experienced investment banker in the past and with significant experience in investment and banking. Mr. Alex Fotakidis, a partner of CVC, an international private equity fund that has done a number of transactions in Greece in the last few years. And Mr. Dimitris Andriopoulos, founder and CEO of Dimand, a real estate developer very active in the Greek market the last few years. Now, good afternoon, gentlemen. I hope that you can hear me. Before we start the panel discussion, I would like just to take 2 minutes and present to the panel just 2 slides and to all the audience. So we'll present you 2 slides. The first slide presents, I'm waiting for, okay. So on the first slide, you can see on the left-hand chart the evolution of the foreign direct investment in Greece for the period 2008 to 2019. You can observe that the last few years we have seen an increase on the foreign direct investment. Actually, in 2018 and more so in 2019, we surpassed the level of FDI before crisis. While on the left-hand on the right-hand chart, we can see the gross fixed capital formation in Greece over the same period of time. We can see that there is a stabilization in the last few years, however, at significantly lower level than before the pre-recession level. On the next slide, we present the breakdown of the investment. The breakdown on the investment in the various sectors of the economy, and you can see that the secondary sector is was the most attractive, while in the third sector, the service sector is the most attractive in the economy, while within the service sector, foreign direct investment in financial services, in logistics, tourism, and real estate were the more attractive. I will switch now back to the panel, and I would like to invite Mr. Patelis in the panel, and I would like to ask the first question. So, Mr. Patelis, I would like to ask you, which are the key pieces of legislation that the Greek government enacted the last couple of years that helped and to improve the competitiveness of the Greek economy and make the country more attractive for investments?
Thank you very much. Good afternoon and good morning to everybody listening and watching in. Thank you for this, for the honor to be invited in yet another very successful conference. And thank you very much for the invitation to this panel. So the government was elected in July 2019 and has passed since then over 135 bills through Parliament. I had to count them, and there's still a lot of them ongoing. It's a little bit difficult to single out which one's the most important one. It's a little bit like asking who's your favorite child. But there has been a lot of reform in terms of simplifying investments, simplifying licensing procedures. There was a landmark bill that was passed about a year ago on licensing, simplifying it, and we're going to have an additional bill in that area come into Parliament next month, a very important bill, We have a bill on labor reform coming out in January as well. There's initiatives on spatial planning. There's a new bill on public procurement that is going to enter Parliament soon. We have the 5G auction coming up in a few weeks in December, and 5G will be operational in early 21. There's the digital transformation of the Greek economy. In particular, the government is being digitized. This is an ongoing process by the Ministry for Digital Reform. We have the end to lignite production by the year 28, and most of the plans by the year 23. We have the new RRF program that will do a lot of training and retraining, skilling and upskilling of the labor force. So there's many different initiatives. And of course, we have the continued reduction in the legacy stock of NPEs. The Hercules plan is on course to reduce NPEs by half. So there's just a lot of stuff going on, and the primary objective of the government continues to be to reform the economy and draw in more investment. You talked about the investment gap. That's the gap we want to plug in, and we want to increase FDI even further from where it is at the moment. Thank you.
Thank you, Mr. Patelis. And having talked also about the reduction of the NPE, I would like now to ask Mr. Megalou, what are the key steps in the reorganization and transformation plan of the bank, and which are the most significant achievement in implementing this plan, and the key steps going forward, the key action going forward for the bank? I think we cannot hear Mr. Megalou.
Thank you, Mr. Damalas, and thank you, the organizers, for inviting us in this conference. And I would like to thank our distinguished guests that we are co-speakers in this very interesting topic. A huge restructuring job for Piraeus Bank has taken place the last 3 years, from 2017 to 2019. And we are now launching a new transformation plan, which, to give you an idea of the complexity, has 17 initiative themes, 120 projects, 100 operational key value drivers. The cornerstone of this project is the NPE de-risking, the capital enhancement, and the third one is the big transformation. On the NPE de-risking, which is a very big task, we are using the Hercules program, which is a very important one in our effort to de-risk the balance sheet of the bank and make it a more lean, efficient, and a profitable one. On the capital enhancement plan, we are embarking on a number of innovative transactions that are giving us the opportunity to preserve capital and create new capital through carves out and sales of businesses. And finally, we are in a position to, through our transformation plan, to increase the top line. This is something that is happening as we speak. So in 2020, we're able to have a 4% annual growth on like for like on our top line. We were able to disburse up to now 5.4 billion euros in financing the Greek economy. That was as of late November, vis-a-vis a 5 billion euro target for the whole of the year, and have a pretty good data on actually the quality of our book, which is very, very encouraging. One more word to say on the capital plan. Through the work that we are doing in actually preserving and creating about 1 billion of capital, we will be in a position to de-risk the balance sheet by 5 to 6 billion more, again, through the use of the Hercules program. So all in all, a huge transformation for the bank, de-risking through NPE deleveraging, capital enhancement through the innovative actions, and basically creating bottom line for the results that are coming through.
Thank you, Mr. Megalou. I understand that there will be also some action that they may attract additional investor on your capital base. With that, I would like now to ask Mr. Fotakidis, CVC partner that has been very active in the Greek market the last few years. Mr. Fotakidis, you have concluded acquisition in the area of health, in the marinas, as well as in the technology sector. I would like to ask you, what is your experience from acquiring, but also from managing these investee companies? Excuse me, I think we cannot hear you.
Can you hear me now?
Yes, please.
Great. Good afternoon, Alexis. It's a pleasure to be on the panel. Thank you for the question. We've been active in Greece since 2017, and we have invested more than 500 million of equity in several projects. The creation of Hellenic Healthcare Group through several acquisitions in 2017, 18, and 19. A significant partnership investment in Scrooge alongside the founders, the leading e-commerce platform in Greece. And then also marinas, as you mentioned. We acquired the Dimarine group from Dogush, and Dimarine has 3 marinas in Greece. Hopefully we can add more. And I think it's important to start with the backdrop. One of the reasons that we decided to focus on Greece and start investing in Greece is we do think there is a supportive macro and political environment. We think that Greece, other things being equal, should grow faster than most other European countries in the next 5 to 10 years. And we think there are a lot of opportunities where institutional investors such as CVC can come in and can support companies to grow. There's also a supportive banking sector. All the transactions that we have looked at and the ones we have completed, we have done with local banking partners such as Piraeus Bank. Actually, we announced one last night, the acquisition of the Vivatia Group. But also it's important to look at the micro level. And on the micro level, one of the positive surprises we found early on, and this is going back to 2017, is really the wealth of the human capital here. And I think it's been discussed in other panels earlier today. We've been positively surprised with the talent pool that exists in Greece. You know, we've been able to work with local management teams who are keen to have support from institutional investors, who are keen to learn, who are keen to go abroad as well and be plugged into our global network and learn from experiences in other markets. For example, the fantastic team that we have at Hellenic Healthcare Group, we've gone with them to visit hospitals that we owned in Spain, in France, in Finland, and they've developed great collaborations with those groups. Equally with the management team at Scrooge, one of the best management teams I've come across in our entire portfolio of almost 90 companies. We've been able to introduce them to other e-commerce players across Europe and host workshops, again, in the context of best practice sharing. I think that's been a really rewarding exercise, both for ourselves, but also the teams. So I think, generally speaking, I think we have a positive macro-political and banking environment. We have a lot of talent already in Greece, and I'm seeing a lot of talent coming back to Greece. I think Mr. Patelis has been helpful with all the various initiatives. We're seeing increasing CVs come in at the portfolio company level, and it's really encouraging. So, you know, from a CVC perspective, we're delighted to have started in 2017, and we want to continue investing in the country and supporting the best companies to grow, both locally and internationally.
Very good. That's very, very interesting, your view as an international investor that has done repeatedly a number of investments the last few years, and the one perhaps to be concluded fairly soon. Now I would like to ask Mr. Andriopoulos, the founder and CEO of Dimand, one of the perhaps the most active real estate development in Greece the last few years, that also has a strategic alliance, a strategic cooperation with a multilateral bank like BRD, but also a cooperation with a private equity hedge fund, HIG. So, Mr. Andriopoulos, I would like to ask you, what's your experience from striking these strategic agreements, strategic alignments in the field that you are very active? What's the experience you have gathered from that cooperation, and how do you view possible future cooperation of international institutions and Greek players?
Good afternoon, everybody. Alexis, thank you very much for the invitation. As you very well know, and everybody understands, the last 12 years, we execute projects in a very difficult environment, starting with the Greek crisis back in 2010, and previously the Lehman crisis, and then the turbulence between 2015 and 2019. So for us, the last year and a half, since July last year, is maybe the easiest and best period in our business life, the last 12 years, because we have a very friendly environment. We have a government which is supporting investment, and the only, let's say, risk which remains and is not going to be easy to be resolved is the geopolitical risk of the country, which is always, of course, assessed from our investors. Now, it was our choice to create a JV company with EBRD back in December 2017 and also work with HIG. And I can say only positive things about both collaborations. So besides the obvious, which is extra visibility for us as a Greek company, and also access to equity and cheaper funding, they gave us extra knowledge and methodology to approach at the same time a bigger number of projects. And this is a reason why Dimand right now is executing 10 concurrent projects. And at the same time, we are preparing right now for the next 5 years another 6 projects. So the experience is very positive. I should say also that the Greek real estate environment for the next 10 years is going always to be growing. There is no room for new investors. As an example, you can see the Ellinikon project, which is about to start, and also with the pandemic and the opportunities which is creating internationally, I think Greece can become a place for Europeans to live, work, and stay for longer time.
Thank you very much, Dimitris. I would like now to ask Mr. Patelis, which are the most important achievements in attractive new investors in Greece and increasing the number of FDIs in the country over the last couple of years, if you can name a few.
So I don't always like talking about things that went well, but in any case, obviously there have been some pivotal investment moments over the past year or so. The first one came from Pfizer, the drug multinational that is opening up its digital hub in Thessaloniki, the second city in Greece. And there the original plan was to attract about 200 professionals to be based out of Thessaloniki. It's only one of 6 digital hubs that Pfizer is running around the world. What is interesting is that what the company discovered in the process is that the pool, the talent that they could attract was of such high caliber that they're now upping the number of people that will be working out of the hub, and there are going to be 500 professionals instead of 200. Of course, Microsoft was another very big moment. Greece became only the 28th country in the world to host a Microsoft data region. It will be 3 data centers in Attica, and this is going to be built over the next 2 to 3 years, the only country in Southeast Europe. And I think what was interesting in that investment, further to the digital aspect and the technology aspect of it, was that Microsoft selected Greece for its political stability and because of the confidence and trust it had. And so that gives very important signal for elsewhere. I would also highlight, also to keep within the theme of the group here, that the reduction in the legacy NPEs with the Greek banking system has come through a vote of confidence of a variety of international players. And this is ongoing. The first wave of the pandemic hit just as Eurobank was about to complete its transaction. And for a moment, there was talk of whether that would go through. That went through nicely. And then in the second wave, we had Alpha Bank that faced a similar issue, but received two very good bids by international investors. So we look forward also to the plans outlined by CEO Megalou for Piraeus Bank, and we strongly believe 21 will be a transformational year for the Greek banking system. But I would also add that there's a lot of small things that happen that are equally important sometimes to the large deals. And probably during the pandemic, the most significant shift has been that we have seen people select Greece as a country to, quote unquote, ride out the pandemic. And that is certainly a change to the past, that Greece would be seen as a source of safety as opposed to as a source of risk. And these small decisions that people make, whether Greek or not, are very significant for the long-term health of the country. And I would echo what Mr. Andriopoulos said earlier, that there are also enormous opportunities in real estate as Greece repositions itself in the international market as a place that's great to live in, as we all knew, but now it's going to be a great place to work from as well. Thank you very much.
Your view is very, very interesting. I would like now to ask Mr. Megalou how the Greek banking system, and in Piraeus Bank in particular, is expected to support investments in Greece, and in particular also in which specific sectors you anticipate that there will be increased interest. We cannot, Mr. Megalou, we cannot hear you.
Let's start about the sectors and talk about which sectors we think that they will be attracting the interest. There is no doubt that the green economy, energy transition, the digital transformation of the service sector and the public administration, upgrading of agricultural production and industry, and the technological economy will play a very big role in attracting investments in the new reality. What do banks do? They provide advice and they provide financing tools, and they facilitate the capital to come into the country. And these are all important tools to adapt to a new sustainable growth model, which will boost the competitiveness of the Greek companies, will reduce their operating costs, and help them enter into innovative sectors. By financing, we help a lot the growth of this economy, which is vital. And I will reiterate the number that, as Piraeus Bank, we're very proud of achieving this year already. As I said, we had the target of 5 billion new lending for this year. We are already at 5.4 billion, and we see ourselves going towards the 6 mark with velocity. In terms of sectors, energy is going to be important. The planned decarbonization by 2028 and the phasing of the lignite power is going to be extremely important. We expect 9 billion of investments in renewable energy sources, and this is installed capacity of around 9 gigawatts from 10 gigawatts that we are right now. We are very big in renewable energy financing and will continue to do so, having financed about 1.4 billion euros in renewable energy. Infrastructure projects extremely important as well. The real estate that we talked about, and the Ellinikon project is a characteristic of that, and of course the upgrade that is expected to come with the agribusiness and agri-industry, where there is a lot of potential, particularly in northern Greece, where again as a bank we are extremely important. Advice, financing, capital, and facilitating the funds that will be coming through the Next Generation EU are going to be very important tasks that the banks have to do in order to facilitate investment in the country.
Thank you, Christos. I would like now to go back to Mr. Fotakidis. Mr. Fotakidis, apart from the 3 sectors that you have already invested, only yesterday evening MIG announced that it has approved on a board level the potential acquisition of Vivartia by your fund. So we would like to hear, what's the key sectors that you are looking and what's the key investment criteria?
Thanks, Alexis. Well, look, CVC is a generalist fund, and so we look at most sectors. But the ones, I would say, that focusing maybe on the top 7 or 8, they would be healthcare, financial services, tech, consumer, and food, pharma, hospitality. Those would be the key ones. And I was pleased to hear some of the feedback there from Mr. Megalou, because a significant part of the operations in Vivartia is in northern Greece, both on the dairy side and on the frozen side. And actually, one of our initiatives is how to help those businesses there grow, particularly in innovative products, focusing on organic, for example, or biological, as we call it here in Greece, or bio, and it's an important area of growth for the business. And actually, I should have mentioned earlier, I myself have moved to Athens now, so hopefully a live example of what we're talking about. After 25 years living and working in London, having now made some initial investments, I've decided to focus on Greece, and I'll be here full-time representing CVC, which is exciting. I think importantly, from a sector perspective, there are a number of sectors which are $1 billion plus in value, and those sectors should attract international investors. Taking a look at, for example, at insurance. Insurance is a $4.5 billion gross written premium sector in Greece. We're in final discussions on the leading company in the sector. I can't say much more than that right now. Hopefully we can conclude a transaction. But again, that's an interesting sector where an institutional investor such as CVC can come in, help the company grow, potentially consolidate the sector. There are more than 70 insurance companies in that sector. I think it's an interesting area and something that we will focus on in 2021. More generally, what's good about what I would say, and speaking for private equity as a market, we have matured as investors. And I think ultimately, we're not looking at coming in and flipping assets, as it were. Our focus is on investing 5 to 7 years. Indeed, the average hold of our investments is 6.7 years. And really, we're focused on building better businesses. And we look for market leaders, normally top 1, 2, or 3 players, strong management teams, and with a vision to grow either organically or inorganically. And also our funds are changing to adapt to a broader investing environment. At CVC, we have the flagship private equity fund, which currently is 16 billion euro, and is the fund that signed the transaction last night for Vivatia. But also we have a growth fund, which is focused on technology-enabled business services, and we'll look at smaller, high-growth tech businesses that exist in Greece. And finally, we have a strategic opportunities platform, and this is typically for infra and quasi-infra investments, can hold investments for 8 to 15 years. And certainly one area, again, tying into some of the comments on the panel, one area we're going to focus on from that fund is the renewable energy space, because I do think there is a huge opportunity there as well.
Thank you, Alex. I would now like to go back to Mr. Andriopoulos. Dimitri, I would like, from your experience and your involvement in a public infrastructure project and regeneration project, also in the Piraeus port and elsewhere, to tell us what's your view about the Next Generation Recovery Fund, how it can support and how it can better exploit, infrastructure investments and redevelopment in urban areas such as Fotakidis, perhaps, that has been recently announced, or the Olympic Stadium of Athens.
First of all, complementary to what Mr. Patelis said about Pfizer and Microsoft investments, I want to give you also another example about the opportunities we have in this country. In 2017, in the country was only one international call center operator called Teleperformance with 2,000 employees. Today, we have 7 international companies operating call centers based in Greece. They employ approximately 14,000 employees, and 70% of them are foreigners. You can imagine the influence they have in the local economies, because all these people, they work in Athens, Thessaloniki, Chania, Patras, and elsewhere, Ioannina as well. They rent houses, they spend money, they go to vacation, and it is extremely interesting to understand that people between 22 and 36, they choose Greece as the place to work. So it's not only, the mega projects like Microsoft in the future, maybe Amazon or Tesla or other investments. We have opportunities in sectors which are not maybe very attractive as names or activities, but they have extremely high add-on value in the economy. And as I said before, the next sector which is going to give us a lot of benefits is housing for Europeans, is what I call the future of offices. When they ask me, is a new product which I call in Greek grafiospita. We have to redesign the office space for the future and our living space. And maybe for a number of employees, we have to design what is called, work and live at the same place. So going back to what you asked me, Alexis, I believe that if we use, and we are going to use correctly, the funds of the Recovery Fund, because our cities, and most of them are old cities, we have a huge opportunity in what we call city regeneration projects, because the state is going to invest by using the recovery funds in the public infrastructure and the public space, creating, easy access, green areas, parks, and stuff like that. And the multiplier is going to be huge, because the private investments in those areas are going to be between 4 and 6 times bigger than the state investments. So areas like Agios Dionysios in Piraeus, which is not theory, we did it, and very successfully. Areas like the Piraeus Tower, Botanikos, the Patras port, the west entrance of Thessaloniki city, and so on, are going to change the real estate landscape and the cities itself.
Thank you, Dimitris. Very interesting your remarks, especially on some hidden projects and successes that has been completed during the last few years. I would like now to ask again Mr. Patelis, what is the plan, the development model that the Greek government would like to implement? We already see some positive reaction from the market. We heard the view of CVC and of Dimand that using all this experience, invites and cooperates with tenants for your new development. What's the view of the government? What do you plan to do? What's the new development model that you intend to apply for the next generation fund, and more so for the increasing the attractiveness of the Greek economy for foreign investors?
Thank you very much for your question. Obviously, this is a very difficult question to answer in 2-3 minutes, and obviously, our main objective is to attract outside investment to plug the investment gap that you showed at the beginning of your slides. This cannot be plugged in solely from domestic savings, because we do not have a high enough savings rate in Greece, so it has to come from abroad. This means that you have to reform the economy to make it more competitive, and this is an ongoing process that will continue to unfold. Of course, our times call also for digitization. This was true before the pandemic. It's even more true now. The RRF, the Recovery and Resilience Plan of Greece, has a very heavy green focus, understandably, 37%. This is another challenge of our age, climate change. And of course, the government was elected on a platform of reducing the burden of taxation. And I would highlight that further to reducing corporate taxes, we have now also done a significant reduction in the taxes on salaried employment, including 4 percentage point reduction in social security taxes and elimination of the solidarity income tax. But I would say that the big opportunity that lies ahead of us in Greece is to take advantage of our comparative advantage, which is naturally the natural beauty of the country, the fact that it's located where it is, it's sun, beaches, mountains, and the way of life, and to try to marry that together and with better technology, cutting-edge technology, with more reforms and lower taxes in order to attract a greater share of the pie. The pandemic is opening tremendous opportunities. Technology has uncovered the ability of people and companies to a degree to choose where they locate themselves from. And so Greece wants to be part of this and will be part of this new post-pandemic era. And we continue to invite foreign companies and investors to come to Greece. Thank you very much.
I would like now to ask Mr. Megalou, what's your view, what's the view of the banks about the new generation fund, and how the banks believe that they will interlink their operation with this significant opportunity, the funds that will be made available for the country?
Thank you, Alexis. I just wanted to point out that the role of the banks in actually disseminating the next generation EU fund into the market, the Greek market, is going to be very important. First of all, we can bridge finance, given the delays that we understand that may be coming in 2021. The banks will be here to bridge finance and front load any of the financing that may be required. That's quite important. Second, we will co-finance. As you know, most of the financing will come for the sectors that are a part of the Next Generation EU by 50% by the fund, 20% by financing of the banks, and 30% by own participation. That's also a very important part. But where I see also the banks playing a very big role, and I would like also to put forward the role for Piraeus Bank, is to act as an agent for the risk management and risk assessment of the projects. As you know, these projects will be having a lot of, will be based on KPIs, and in order to go to the next stage, you have to have fulfilled a number of KPIs in the previous and so on. And the banks, with their credit and risk management knowledge, they will be the best medium to disseminate a lot of these funds and activate the funds going forward. It is very important to note that we have the Next Generation EU that is about 32 billion, 20 billion that are coming from the National Strategic Reference Framework, the ESPA. The Common Agricultural Policy is about 19 billion, and we have another 10 billion from the National Development Program, a total of 80 billion, which are going to be deployed over the next 7 years, and we estimate this will impact the GDP of the country 1.5% to 2% per year, upgrading it from normality. So quite a lot of work to do, and the banks are pretty ready to start disseminating this as the funds will be coming through to the Greek economy.
Thank you very much, Christos. I think we have time for just another short question. I'm tempted just to ask Mr. Andriopoulos. Dimitri, we have seen a bit of a slowdown in real estate transactions the last few months. There have been so many transactions in 2019 and the first month of 2020, and we've seen a bit of a slowdown. That does not mean, of course, that we don't see new buildings being built, but more so the transaction. What's your view? When we shall expect to see a reversal of this trend?
To be honest with you, I don't see any slowdown. What I see is a lot of money out there waiting for projects. So the responsibility is back to us, Greek entrepreneurs, to create ideas, vision, and projects, and the money is there. So, I mean, I don't see any slowdown. On the contrary, and I mean, being with the pandemic the last 9 months, I see a lot of activity in the hospitality sector, which is strange enough, but you know, people are going to go back to the vacation in 2021, 22, 23, and I see a lot of movement there and activity. I see a huge activity in logistics because retail is moving from the physical stores to the logistics. A lot of demand for technology infrastructure, like data centers and so on, is not only Microsoft, which is gonna build data centers in Greece. I mean, the international community is gonna follow, and we have already requests about data centers from other operators. I see a lot of demand for new office buildings, environmentally friendly, low cost, zero emissions, independent energy producing, and so on. So, I mean, our data is not a feeling. I'm talking about facts. Is the extreme opposite.
That's very good news and very positive sign. I would like just to make a quick conclusion of this discussion. Understand that foreign direct investment, but also fixed capital investment are expected to increase the next few years on the back of structural reforms, including lower tax rate, lower and reduction of the indirect employment cost, higher liquidity from the banking sector, but also from the regeneration, next generation EU fund. So overall, we see some very positive signs despite the late part of the pandemic that we are currently facing. I would like to thank you all for your time and for your participation. It was very interesting, and thank you very much.
Thank you.
Thank you all.